Hello, you're watching Smart Money. Well, Cogence is a first-of-its-kind discretionary fund manager in South Africa, but with full global reach. It marries the expertise of Discovery, which boasts a behavior change platform that's the largest of its kind, and BlackRock, a world-leading asset manager with rich investment research and global capabilities. And then further combines this with the local investment management expertise of RisCura, who understands the local market within a global context. And joining me to get into some of the nitty-gritty behind this collaboration that we've got in play is Jonel Matthee-Ferreira, who's CEO of Cogence, and Kerri-Ann Sattary, who's portfolio specialist at Cogence as well. Welcome to you both, and thanks so much for joining us. I'm going to jump straight in, Jonel. Like I say, Cogence, the first global discretionary fund manager in South Africa, marrying the expertise of Discovery, BlackRock, and RisCura alike. Take us back a bit. How was the partnership struck?
Yes, thanks, Alishia. So when Discovery decided to launch a discretionary fund manager, Cogence, the decision was to partner with the best in the world. And that is how the partnership started with BlackRock. We wanted to partner with a global leader that also shared the same values and the same philosophy as us. And that's why we're so glad to have this partnership with them. It also fits in perfectly with our philosophy in how we blend portfolios and how we look at the world.
Yeah. Kerri-Ann, and now offering portfolios that are both local and global in nature, right? Constructed and managed by BlackRock globally, but then RisCura locally too. So what, in your opinion, makes the partnership work?
Thanks, Alishia, and thanks for outlining how BlackRock, RisCura, and Cogence collectively work together to manage the Cogence solutions. In terms of why we've partnered with, these expert asset managers that we've identified, firstly, in BlackRock's case, they are the largest asset manager in the world, managing over $10 trillion in AUM. And we've partnered with them for a myriad of reasons. So firstly, BlackRock, they provide true global reach. They have offices in 60 offices across 38 countries in the world, almost 3,000 investment professionals managing solutions across active equities, active fixed income, multi-assets, alternatives. They also have a huge passive solutions business. So why does that matter? Well, to offer truly diversified portfolios, to manage volatility and to ensure consistency of returns through the cycle, one truly has to intimately understand that global context, and BlackRock are perfectly positioned for that. Secondly, Cogence can also leverage from the exceptional breadth and the depth of resource available at BlackRock. So just for those unaware, the Cogence solutions are actually managed by the multi-asset strategy and solutions team within BlackRock. And that acronym MASS, M-A-S-S, is actually, quite serendipitous for the fact that it's actually made up of 500 investment professionals. It is a huge team alone. But in addition to the significant resource, we can also access the broader BlackRock capability. Now, that includes the like of the BlackRock Investment Institute. So this is a dedicated think tank of economists. It includes central bankers, senior political thinkers, and they really bring the macro insights to the table, which ultimately informs the capital market assumptions that drive the long-term asset allocation of the Cogence solutions. Then there's also specialist investment teams. They're subject matter experts, and they do granular deep dives into parts of the market. There's the Aladdin platform, which I'm sure Jonel will touch on later today. There's also a risk team, and they're, investment risk consultants that challenge the core portfolio management team on what-if scenarios to ensure that our portfolios are managed robustly. And then following on from this, so we've obviously got the resource, but also research is critical. So asset allocation is a huge driver of returns in portfolios, but another lever we can pull is manager selection. And the trick here is to blend a variety of managers with different styles who can outperform over time, but at different times to improve that overall consistency of returns. But it's really important that you actually are choosing managers that can add after fees alpha, that they're not going to just diversify away their returns by blending too many managers in portfolio. So from this end, I think globally, BlackRock, they're the pioneers in passive investing. In 1996, they introduced the iShares ETF, and they're experts in top-down macro analysis. And then you've touched on RisCura. They're also absolute experts in terms of the local context. And we really trust these partners to deliver the best manager research to the Cogence portfolios.
Okay, so Kerri, I'm going to jump in there because that's a whole lot that you've laid out on the table, and it really perfectly does illustrate, the kind of collaboration that's in play here. But Jonel, let's loop back to something that Kerri touched on. There's a digital or tech benefit being derived here as well, right? Cogence leveraging BlackRock's Aladdin Wealth platform as well as Discovery's Vitality Insights and Data. So briefly, talk us through how this access to tech solutions and data works to improve the offerings you're actually putting on the table.
Yes, Alishia, so there's actually two parts to that. So firstly, the team that's responsible for managing our solutions has got access to Aladdin Enterprise. And what that means is that there's a team of over 2,000 people looking at these different risk factors. There's 3,000 different risk factors that they actually look at. What that means for our portfolio, that on a daily basis, they can actually see what is the risk factors influencing our portfolios and our portfolio structure to look at the different market environments we're currently experiencing. The other benefit of that is you can also do stress testing forward. So they can actually look at different scenarios, what's going to happen to our portfolios if something changes in the environment. That is what the portfolio management team has got access to. Then our Cogence technology portal and website enables advisors to also benefit from the Aladdin Wealth technology. So that makes it for your clients, they can actually, or you as advisor can put your client's portfolio in, and you can actually stress test your client's portfolio forward. We all know that looking backward is easy, but it's not a prediction of what's going to happen in the future. So for example, you can sit and you can show your client, if the dollar depreciates by 10%, this will be the influence of your portfolio. If the rand strengthens, if there's an interest rate increase, this is how it will happen. We also have a very powerful technology system where you can actually digitally onboard your client. You can sit in front of your client, take him through all our questionnaires where it incorporates the behavioral aspect as well. And that is the differentiation of us. We're not only looking at investments, savings behavior, but also bringing in the healthy futures that powered by Discovery, Vitality.
Yeah. Okay, so Kerri-Ann, how does this influence then the spectrum of, the diversity of funds on offer? And what trends have you started to notice from investors when it comes to choosing between local and global investing opportunities?
Yes, so, with South Africa only representing roughly 1% of the global market, local investors really are increasingly aware of the opportunities that are being missed, not having exposure to other sectors and parts of the world. Ring 28 came with this increase in offshore allocation to 45%, and that was truly a game changer in our industry. Now the biggest hurdle is portfolio construction. What is that optimal offshore allocation? With our partnership with BlackRock, we've managed to conduct extensive and very in-depth risk analysis, modeling for different outcomes. So if we have different offshore exposures across our risk profile solutions, what would that look like? And what is that optimal range for global exposure for our long-term strategic asset allocation? The deriving facts that we look at when we are, modeling for this is we're actually trying to target a minimal foreign exchange risk level. To mitigate any returns coming from or any returns decaying from any FX movements. So this ultimately aims to boost our portfolio efficiencies by spreading the risk across multiple geographies. So for the Cogence portfolios, our long-term strategic asset allocation is roughly 30 to 35% across our cautious and more aggressive portfolios. We've always been on a slightly more bullish side of the market in terms of our offshore exposure. And now we're actually seeing the South African peers starting to track more closely towards where we are, and some even maximizing that full 45%.
Yeah. Kerri, is there a portfolio that's seen particularly impressive success?
Yes. Thanks for that question. It's always nice to be able to answer when we've got some good performance going on in our portfolio. Yes. So just in terms of our strategic long-term asset allocation, as I've explained, we have 30% offshore exposure in our cautious, and our most aggressive has 36% long-term anchoring. But in terms of dynamic asset allocation, so that's being nimble to short-term dynamics, we'll actually tweak the portfolios around the edge there. So we're actually dynamically overweight global assets by 1.3% across our portfolios. And that has been really positive for actually two of our portfolios. So I'm going to firstly just touch on our Cogence Global Growth portfolio. Now that's in the EAA aggressive category, and that has delivered net of fees in USD 14.2%, which is about 3% more than peers year to date. But even more excitingly, over the longer term, over the 12-month period, we actually delivered 25% versus the peer group's 20%. Now, that outperformance has come from asset allocation as well as manager selection. Asset allocation, we're very overweight US equities. We're very positive on the AI theme. And then in terms of manager selection, two of our portfolios, so our portfolios are constructed with both third-party and BlackRock funds. One third-party manager that's done really well is GQG Partners. They're a huge US equity manager with a quality bias, very concentrated funds. And then our BlackRock fund is a lot less concentrated. There's about 130 odd holdings there, but they also have a significant exposure to the US market, which has done well. And then just secondly, our Cogence Cautious portfolio. Now that feeds its global exposure through that Cogence Global Growth portfolio. And because that's done so well, we've actually seen really strong performance there, outperforming by 3% over the last 12 months.
Got you. Jonel, look, given the fact that you offer this broad spectrum, when it comes to the diversity of funds on offer, things can get pretty complex, right? So talk us through that complexity, but I guess more specifically, working extensively with financial advisors, helping them cut through that investment complex, and how would you say Cogence adds value to these financial advisors in an individual capacity?
Yes, and we actually try to keep our range of solutions very simple for advisors. So we've got a range of model portfolios, cautious, moderate, and growth. And similar to that, we've got collective investment schemes. We also want to be product agnostic because we know advisors and clients prefer different options. Then we also have an income fund of fund because we know in South Africa, a lot of clients in their retirement are very income sensitive. And similar to that, we've also got a range of free US dollar denominated portfolios, similar free risk profile solutions, and into that rand feeder fund. So we actually decided to keep our range of solutions quite simple. Advisors are responsible for looking at their client, doing the financial personality assessment, and then through that, assessing which of our solutions are the best of the client. As I've also mentioned, through the technology, it is very easy to also make sure that your client's portfolio are on the optimal point on the risk-return spectrum.
So Kerri-Ann, as we wrap this conversation up, then what major investment trends are you monitoring right now, whether that be locally or globally at this stage?
Yes, it's quite an interesting question. And, having just come off the Cogence Summit, we had the head of global wealth joining us, where we got granular insights on what's driving global and local wealth trends for that matter. We also had economists on stage sharing the investment trends that we're seeing. And an interesting point that came out of that conversation is, increasingly investors are turning to multi-asset solutions. Why? Well, markets are really different now than they've been for the past 30 years. We're in this new era of higher macro volatility, sticky inflation, high interest rates. So there's a lot more complexity as well in the investment universe. There's a lot more traditional, non-traditional, and new asset classes coming into the market. And this uncertainty of this new regime really brings with it some complexity, but also a need to actually start shifting towards multi-asset portfolios. Because you can't just sit in one asset class and hope to benefit from all the options available. But also to take it one step further, it's taking an active approach to your multi-asset investing, where in this more turbulent market regime, dynamic portfolios are going to be the ones that are rewarded, not your old school buy and hold asset allocations, which are what has prevailed in the last 3 decades or so. So this is why Cogence really believes in outsourcing these investment decisions to a specialist partner that has those asset allocation expertise, because to get that decision wrong is very costly for the end client.
Well, Jonel, Kerri-Ann, thanks so much for joining us today. That, of course, Jonel Matthee-Ferreira, CEO of Cogence, and Kerri-Ann Sattary, who's portfolio specialist at Cogence as well.